Right, guys, what's up? Long time no see. Hope you guys doing well. Welcome on today's video. I know I skipped a few days from last week. I didn't trade last week, and I think the last 2 days of the week, Thursday, Friday, I guess. I'm not so sure. Um, that's why I did not upload any videos last week, end of last week, actually. But today, new week, Monday. I'm really excited. Um, this week is going to be super volatile. Actually, I think Trump is speaking at the moment as I'm making the video. I guess so. I think 1:30 doesn't matter. So I think Tuesday, Wednesday, Thursday, high impact news. Super excited. As you can see, we had a nice reversal from this bearish trend from last week. I think I also had a loss. I think it was I think it was Friday or something, Friday or Thursday, because one of these days I was not trading, but I think Thursday I took a loss, and on Friday I didn't even trade, as I remember. As you can see or hear, I'm still battling with this. I got cold or got something, and the whole last week was just a complete mess for me. Anyway, new week, new me, new trades. Welcome back. Hope you guys are doing fine. Today, actually, I was pretty just go and start in the middle. So for this week, I was completely expecting bullish movements. I was expecting price to reverse to its original, heights. After last week's dump, I saw some signs during pre-Asian session. So like when I woke up, no, sorry. So yesterday, basically, when Asian session opened around like what 8. Oh, it's a 4 hour. Anyway, um, I I saw some signs that we are going to reverse from the bearish movement. Or I was actually pretty positive on that thinking. So my bias was completely bullish on the day, since we disrespected this Ferval gap. As you can see, there is a 1 hour, 4 hour Ferval gap here, which got disrespected. Also, where is that? I mean, this was already mitigated, but yeah, but this one here, I think I highlighted either on this 4 hour time frame or the 1 hour time frame. Anyway, it got disrespected, it got inverted as well. So I was pretty biased, pretty convinced that we are going to be bullish on the day. We had a nice draw on liquidity. This double tap here also. Um, Here relative double tops, and also these basically the all-time highs from last week before we started the bearish movement. So basically I was waiting for price to give me some signs. I highlighted, I'm just gonna switch on, maybe let's switch on the 30-minute time frame, because maybe it's the most. Or actually I'm gonna switch, sorry, on full. Sorry, I forgot to, because now I'm using TradingView. This is a my funded futures 50k eval. I'm using TradeAwait, and I'm using TradingView for now, because I switched from TradeLocker and the other. I switched prop firms also, so I'm just trading on this one, so much clearer, and just I don't know, I like it much better. How do I? Oh, like this. As you can see, TradeAway here. I think I can show you the. No. So yeah, I made $790 on the day. I'll show you the trade. I just wanted to show you this for the pocket hunters. So I made $790 on the day on a 50k account. Uh, really nice start of the week. Let's just get into it. Maybe in the 1 hour it's more clear. So we had this movement. I think this was Friday. somewhere around Friday. Oh yeah, it was Friday. So this was Friday's movement. I think I didn't trade on Thursday and I made a loss on Friday. Now I remember because I remember this shitty movement because I was already pretty convinced that we are going to reverse from this because these movements were like, I assume that after this Ferval gap, this bearish Ferval gap inversion with this movement, even though we made a pretty deep movement to the downside after that inversion, we started to keep this range here. So we never went below these lows. We never went below these lows. So I was pretty convinced that next week we are most likely going to be bullish. So I highlighted this 4 hour for val gap. I'm not gonna switch timeframes like super frequently. You saw it earlier, so this was and I usually, because so many of you are texting me and asking me, oh, something. Sometimes it's not so clear that what time frame you are talking about. What time frame I'm talking about is usually what time frame I'm already, and if I'm not on that time frame or not showing that time frame, I usually write, in the brackets, or this is a 4 hour Frevel gap, and I write it inside that this is a 4 hour Frevel gap. So for me, I don't have to switch time frames every 2 minutes when I'm explaining something. So we had this bearish movements to the downside last week, and we had a nice reversal after this accumulation. We had a nice sweep of liquidity, a break of structure. So market structure shift has happened to the upside. I had this 4 hour fair value gap, and inside that 4 hour fair value gap, I had Asian lows. So this was the movement at 8 on Sunday. So this is when Asian session opened the market yesterday. So inside this 4 hour Farewell gap, I had Asian session lows, uh, and I had another. I think it was not even a 4 hour for. Oh, this sorry. We have what time frame? So 1 hour. So this is another 4 hour Farewell gap. We are on the 1 hour time frame now. So this was another 4 hour for val gap highlighted, and just about that 4 hour for val gap we had London session lows, and I marked this one as 5 a.m. on NQ. I can maybe, so I can switch maybe on the 5 minute time frame. So this one here, it's nothing basically. So you see a low point here, but if I switch to ES, for example, if I switch to ES, as you can see, we have triple bottom liquidity here, triple bottom liquidity here, and we had also at the same position we had London lows, and we had this 4 hour for val gap. So as you can see, um, on ES we had this was, for me, it was pretty obvious that even though we are moving up, up and up and up, here we came a little bit closer to this. I thought we are going to take it down before pre-market opened at 8:30. 8:30 was here, so we were here, and ES was making a lower high. But even though ES was making a lower high, we were way above price level of NQ. I mean, ES was ES was NQ was the one lagging behind ES, so ES was way ahead of NQ. That's why ES was making a lower high, while NQ was making a higher high, as you can see it here. Uh, I'm just gonna shit. There we go. So I'm sticking with NQ for now. As you can see, we had a nice SMT divergence, but basically ES was already ahead of NQ, but we had a nice bullish SMT, which were just giving me even more confidence that we are going to be, or basically not. It's not, as whenever you see an SMT, it's not the likelihood that, okay, a bullish setup is going to happen 100% sure. It's the matter of perspective. It's the matter of other confluences, and basically one confluence alone doesn't mean anything. So you shouldn't take a trade off of a SMT, a bullish SMT or a bearish SMT. It's not that, okay, I see a bullish SMT here, so I'm gonna press buy and then I'm gonna rob the bank. No, But I assume that okay, NQ is making stronger movements while ES was here, as you saw it earlier on the other chart on ES. We were making a lower high, and then we were getting close to market open. I switch one more time to ES. As you can see, up and market open, highlighted by these dash lines here, the dash line basically. Um, we were constantly going to the downside, sweeping out this triple bottom liquidity at 330. So this 330 equal lows here, which is really strong draw on liquidity. Every time you see equal highs, equal lows, double bottoms, triple bottoms, relative whatevers. This is a really, really, really strong pool of liquidity, or a draw on liquidity. So these are really powerful. Keep your eyes open and try to. I mean, not saying like okay, you see, an equal high, equal lows here, and the price is up here, and we are definitely going down and pick up that liquidity pool. No, but as I said earlier, it's a matter of perspective as well. So up on market open, we came down, we swept out these lows, we swept out London session lows, and just keep in mind the price. So here we came down at 940, 940. We swept out London session lows at 940, while on NQ, shit, while on NQ, what if I just switch to the 1 hour, 1 hour, 1 minute time frame? So it's just, let's keep it simple. I took the trade on the 1 minute, so I'm just gonna show the rest of the trade on the 1 minute, so I don't need to switch around like crazy. So here, this was the triple bottom liquidity on ES. So we came down also on almost with NQ as well, like tick perfectly touched this liquidity line here. So we swept out those, but we never came down and sweep out London session lows, while ES was already came down and swept out London session lows. And while ES was doing that, look what NQ was doing. So while ES came all the way down to sweep out London session lows and almost mitigated this 4 hour Farewell gap, uh, during that time, what NQ was doing, NQ was already making a lower, a higher low or a higher high basically. So I'm not sure if you remember the time, but I highlighted 940. 940, we were already up here. We were already up here, while ES was just going down and down and down and down, sweeping out these lows, sweeping out these lows. And by the time here, as you can see, way before market open, we started to go down. Before, at 9, from 9, yeah, as you can see, from 9.5, let's say, we started to accumulate here, accumulating. We started to manipulate to the downside until this pool of liquidity, which on ES was triple low or equal lows, basically, we started to manipulate. And as soon as market opened, we started with the bullish candle and started to move to the upside, reversing this 1 hour Farewell gap. And at the same time, ES was making a lower low, sweeping out that triple bottom liquidity as I showed on the ES chart. And also, ES came down and swept out London session lows as well. And on NQ, we were already disrespecting this 1 minute bearish Farewell gap. So we had a nice 1 minute inverse Farewell gap to the upside. That was my clearest confluence that okay, we had this bullish SMT here, we had this nice AMD model basically. So we had accumulation, manipulation to the downside, and you shouldn't have waiting for more, down movements, because if you're looking, I mean, if you're checking the two assets at the same time, ES and NQ, they are correlated and they are making almost the same movements. except when they are making SMT divergences. What it means, if ES is making a lower low and NQ is making a higher low or a higher high, it depends on the position or the direction, whatever, that is your sign that okay, ES took out this low, ES took out this low, and while ES was doing that, NQ was making already, NQ was already going higher. What that means? That means that ES took out all the necessary liquidity from the downside, so NQ doesn't have to do the same. So because one is already took out the necessary liquidity that it needs to fuel the price action to the opposing direction. So this manipulation was way enough for NQ to sweep out these lows or mitigate these lows and making bullish movements already. And as soon as I saw this opportunity that okay, ES is way here but NQ is making a bullish movements, we inverse this 1 minute farewell gap, that is my sign that I am going to go for a long setup that I was actually waiting for. Um, and as you can see, I entered on the inversion as soon as this candle closed. If I hover here, you can see I entered on the, here's this blue arrow to the upside. Basically, that means I entered on this candle. But this side arrow on the left hand side of that candle shows you exactly which part of that candle I opened. So basically, the candle was just here. I entered because this one here closed here, this candle closed here, and we started rapidly expanding to the upside, and I entered around like here, one fourth of the actual whole candle. So I entered on that. I don't think I need to over explain this. I entered on the fucking blue arrow, as you can see here on the left hand side of the bar. My target was actually this one, so the original accumulation point, basically, where we made the SMT divergence, and suddenly, when time hit 9 a.m., we started to move to the downside, we started to accumulate, we started to manipulate. That was a clear sign for me that this is going to be a clear target for me if we are going to reverse. Um, this accumulation phase was the break even point for me, so I decided to move my stop to break even. Luckily, this candle didn't hit the break even point here, as you can see, because in that case I would have been stopped out at break even, and after break even price just went all the way to the upside. So I had a nice bullish SMT divergence because ES was making a lower low while NQ was making a higher low, or basically NQ was making bullish movements while ES was just sweeping out the lows and the important levels like London session, and on ES those equal triple low or triple bottom liquidity, basically. So that is a perfect bullish SMT with a nice 1 minute inversion as well. I set my stop to break even at this point, and as this candle hit this highs here at the accumulation point here, I moved my stop to break even, and after that we just skyrocketed. Basically skyrocket. This is the 1 minute time frame, so basically we literally skyrocketed to the upside, and just as you can see, and that's a really good one also. If I hover here, I'm not sure, bro. Anyway, I think you can see it here somewhere. Oh yeah, here. If I hover on this arrow, down arrow, that's where my exit is. So some people think that okay, here's the actual arrow, and I exited on the top of the this wick. No, I exited exactly where this line is, the original accumulation point, or actually this not accumulation point. This is the original range of the price before the accumulation and manipulation happened. That was the original range, basically, of the price. So that was my target after I saw this accumulation, this manipulation to the downside, even a deeper manipulation to the downside on ES, and a nice reversal on NQ. This is the clearest target that I could have. I could have targeted this one also, but honestly, ES was super slow and making down movements. Even though I was here on NQ, ES was already like basically still ES was still in here somewhere around here, and I was like, okay, that's pretty much enough for me to hit this target. It's a nice 3.5 RR also, but as you can see, I let's see, maybe 15 minute. So as you can see, maybe the 30 minute would have been better anyways. So as you can see, I highlighted this 1 hour for val gap. Maybe I can go on the 1 hour for val gap. 1 hour time frame, sorry. I highlighted this 1 hour for val gap at the upside because my bias was okay, maybe if not today, but in the upcoming days, we are going to hit all-time highs again. But before that, we have a nice 1 hour for val gap, which is, look at these movements. These has to be rebalanced. I mean, even though we have VIX almost, lapping each other here, so it's, you could say, oh, it's not the big one, it's not the big like this one. It doesn't have to be big. It has to be there. If it's there, it has to be rebalanced at some point. It doesn't mean that if it's there, it has to be rebalanced immediately or in the next 15 minutes. No, but it will be rebalanced maybe a week later or something like that. But if you leave it there as a potential target or as a potential draw on liquidity, you will see eventually after some time that price does go in these directions, because that's a pretty strong draw on liquidity. We almost had a nice, oh my god, let's just maybe more further than like this, almost double top liquidity, which is all-time highs at the same time. But I was honestly not expecting price to just crash through the all-time highs from last week. But I did highlight this one because even though this was my target, so this was my target, I was like, let's see what price is showing me or what price is doing. uh, Even if I would have been aiming for more than this one, that would have been my maximum. So I would never ever target these all-time highs. Maybe target the this 1 hour for bell gap to get mitigated, but not really. It's more than enough. As you can see, uh, with this low risk, on a 50k account, it's more than enough. I mean, it's 3.5, so it's super great. And as you can see, after we went above this level here, we started to accumulate and thinking, and after some time, we finally mitigated by like a 1 nanometer wick here. We mitigated that 1 hour for val gap that I showed you earlier, um, and after that, accumulation, and we just started to move to the downside, and eventually NQ took out London session lows, mitigated this 4 hour for val gap, and we are basically here. As you can see, Trump did not cause any trouble today, as I think he was speaking today, right? I'm not so sure. Correct me if I'm wrong. Anyway, so we came down from all the way to the high points. I'm sorry. So we came down all the way from here after this 1 hour for red gap mitigation. So beautiful, beautiful. Like I love these movements when you have a bias and price is just moving tick perfectly. So I was expecting this sweep, that mitigation, and after that mitigation, price just dropped again, almost maybe even below to the original range of the price that was happening during the day here. So as you can see, almost we are slowly moving back to this range. So I'm pretty sure we are going to be bullish this week, or most likely, basically. But let's see. Of course, we shouldn't assume anything. We shouldn't, you can have expectations, you can have a plan and stuff like that. But what I always tell you, just listen, watch, react. and have a plan, have a clear plan, but react, not just blindly pressing buttons because you saw five down close candles and you think even your bias was bullish. You see these down close candles, and some traders are like getting so fucking FOMO, and they're like, okay, I'm gonna enter on a short trade because price is moving down, so I obviously need to take part of this movement. I cannot get left out, and I just need to be on this move. And they enter a short trade targeting London lows here, and price is just reversing from a key area because they are not watching ES at the same time. And it's just, you have to take into consideration so many things, not just pressing buy and sell buttons. You need to have a clear plan, but also, even though you have a clear plan, you need to react, not to predict. React what price and what the charts are showing you, and that's it. That's your job. Don't aim for the moon, aim for a piece of the pie, and you're gonna be so fucking happy. You make a few bucks here, a few bucks there. uh, you make it like 5 times a week or 4 times a week while they are controlling your loss, and you're going to be so fucking profitable in a so short period of time you couldn't imagine. So yeah, some of you are asking me, actually a friend of mine just asked me today. This was a really good question. I'm gonna cover these kind of topics in separate videos because I really love to talk about these, because I also battle with psychology and all these things. So I went through this. I've been there, I done that, I fucked up, I blown accounts, stuff like I know I'm not everything, sorry, but I know these struggles. I would say I know these struggles. Most of us doing the same thing in the beginning, so don't be afraid to make mistakes. But he was asking me, what do I do if I don't see any quality setups, or don't see my plan, or don't see my actually basically your setup is not present at the day. You just don't trade. So you should have, as I said, you need to react what price is doing. But if you have a plan, like, okay, for example, today I was 100% completely bullish, and if price is making a dump movement, like crushing through all these fair gaps and all the lows, and it's nothing nearby my original targets, do I enter a short trade? Most likely not, because that was not my plan. And this is how you need to make a difference between reacting to every single thing, or react when your plan is aligning with price action. It's not like, okay, if we are going down, I'm reacting on the market and I'm going short. Okay, we are going upside, we're going to the upside and we are making bullish movements, and my bias is bearish, but I'm reacting on the price action, so I'm jumping on a long trade. No, you need to have a plan. You need to have a clear bias, and if the setup and if the price action is matching with your bias and your thinking and your strategy and your plan, that's when you jump in the trade, when you have all your necessary confluences. That's it. If you don't have them, you don't trade, because not if you don't trade, if you're not trading, you're basically winning because you're not risking. You are not you can avoid so many loss when you don't feel like, you will feel like, okay, I need to take this trade. But if you don't feel this, it's probably better not to trade, because you're preserving capital, you're saving your money, you're avoiding losses, you're avoiding stress, you're avoiding FOMO decisions and emotional decisions, because that's how you're going to be profitable, not when you're making 10 RR trades. You become profitable when you're in control of your emotions and your risk management. That's it, guys. I hope you like this video. It was a really beautiful day, really nice week opening, really beautiful price action. I hope it's gonna stay the same. That's it. Let me know in the comments. DM me as you usually do. I'm so glad that you are DMing me a lot. I'm really happy. I'm glad to help you. If I have time, I'll do everything in my power to help you. Take care, guys. Cheers and goodbye. And have a nice and profitable trading week, guys. See you in the next one.